Good day, hello everybody. Brian here from quantlabs.net. Sorry, it looks like I'm starting a lot later than I originally wanted to start. Sorry about that. Anyways, let's get on with the show. Just doing all my audio check. Everything seems to be hunky dory. All right, so let's talk about US dollar. There's going to be some, I'm going to keep it. Hi, Project. I'm going to keep this. I'm going to keep the politics pretty well to almost nothing. But unfortunately, there is some politics going on here, and I'll keep it to a minimum because I just don't think this is the appropriate venue for this. So, first thing, if you're on YouTube, get over to tradingview.com. Profile is Brian Downing, QLN, and you'll find my stream tab there to answer into the chat. Okay. So type away whenever you want. So let's start talking about the first thing I think that's very important for people to understand is this is the DXY right here. This is March. And the one reason I like this because you get the 5-day, 1 month, year to date. So you can see here over the last year, I'll continue along. My computer just blew up. TradingView is written in JavaScript, so it does not like it. All right, so let me get my screen back up. Here we go. Okay, so as I was saying, my apologies. Just type away in the chat if you can see me, okay? I just want to make sure I'm okay. All right, so as I was saying before, we've got this video here. This is the history of the Federal Reserve done by this guy here, Murray Rothbard. And the reason I'm bringing this up is so that we have an understanding about the Federal Reserve and why it was created. In the 1800s, late 1800s, there was the monopolists basically controlling the banking industry, the steel, iron industry, oil industry. It was all monopolies. And they needed a banking industry and they needed a way to control some of the newer regional banks, the small ones. So that's why they kept and created the Federal Reserve. It was all about monopoly and anti-competition. So if you watch this video and then it goes into the new terms that we know about, too big to fail, loaner of the last resort, this is back in 1984. So all the lingo that we hear now is from this video in 1984. And the thing is, when you watch at the end of the video, there's two people that say, hey, you're not printing money, you're extending credit by the US government. And you start to realize that these two people presenting are brainwashing you, trying to tell you that printing money is money. But yet, I guess as investors, it's who is being pitched to, is that they're basically extending credit for the U.S. government to operate. And when you look at where we're at now in 2023, it is credit. It's not real valid money. Okay, we need to know that, and that's going to affect the long-term valuation of the U.S. dollar. So, as I said here, thanks, Project. How you doing? I haven't talked to you in a while. All right, so that's basically what I'm trying to tell you. They're basically telling you that what's being printed is sound money. It's valid. So here's a headline from, of all places, depending upon your political leaning, is CNN. Okay, CNN. Okay. So basically, headline is in desperate bid for cash, the Treasury is auctioning 1-day bills. So let me repeat that. This is the U.S. government trying to stay alive, keep their lights on, basically. In desperate bid for cash, 3 times now. In desperate bid for cash, the Treasury is auctioning 1-day bills. I don't know if this is before or after the debt deal, but they're already saying the next debt deal that they'll have to go through is probably next year in the presidency. So that's how desperate this situation is for the U.S. government, no matter what you read. As you can see here, this is from June 1st. Okay, that's how serious it's getting. Okay, so let me close that up. And let me go to my next point. If you got questions or comments, just please type away. I can be wrong. I've already given you a lot of explanation what's going on. So the real thing that people don't really understand is this: the U.S. debt clock. Now, this is kind of like looked upon as the Bible of the state of the U.S. Okay. Now, I'm not here to pick on the U.S. The rest of the West, like Canada, where I'm at, Britain, and all of Europe are in bad shape economically. Okay. So when you look at here, the U.S. national treasury or debt is at 31 trillion. Last I heard, it's up to 34 billion. Okay. So I think I put out a video. I'm going to repeat myself here. This is the big one. U.S. income taxpayers, 128 million. So now you've got 334 million people total population. So you have approximately about 1/3 of the population there who are taxpayers. 2/3 of the population or thereabouts are just sitting around collecting, I guess, money from the government. That on its own is not sustainable. Okay, that on its own is not sustainable. Look at the personal debt per citizen. That's citizens of the U.S. So you're at $74,000. A new baby is born in the U.S. They're automatically right on the spot the day they're born. They owe $74,000 to the U.S. government, or the sharing of that. So that's all fine and good on what's going on in the U.S. So I can slice and dice this any which way you want. Okay, but the situation is not good and it's not sustainable. So they're in desperate mode to keep the lights on at the U.S. So their deficit spending like a couple trillion a year, and it doesn't matter what side of the aisle you're on. They both do it, and they're both just as bad and irresponsible. Because this is about, if you're in the U.S. driving around in a Mercedes, living in a pretty nice gated community, well, the interest on its own to service this debt as is going to peg down your lifestyle pretty fast when this starts to unwind, and it will unwind fast. And yeah, it will affect the US dollar. So that will affect every person in the US and pretty well every person in the West, as you'll see here. So there's all that. And I'm not going to get into the nitty gritty of it. Okay. So I've already shown you the current situation with the US dollar, where it's at pretty well negative. Last year was good. This year it's up and down. Okay, so this is where we're going to start looking at government debt to GDP. I like to use trading economics. I just don't trust anything coming out of the Fed anymore, because they've, just so you know, that they've reset a lot of their data. Used to go all the way back to the 30s, 40s, and 50s. A lot of the data sets they use is they just go back to maybe 2004. So they're trying to take away all the history that they have, redefine it, repackage it, and make it not look so bad. That's what the Federal Reserve does. So I don't trust them. So let's start looking at the trading economics here. Okay. So here's all the countries that owe money based upon national debt and your GDP, your production in the country of these. So if I look at the last, I should say, you can see here you got Japan, and then we got Venezuela. That's why you hear about Venezuela and the US dollar, blah, 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 blah. Sudan, Greece. This one, Singapore, is a little different. Singapore is a very government subsidized country, but very, very, very wealthy. They can afford to do this. You got the likes of Libya, and there you go, US, 129. So the US, instead of trying to improve the situation, they just don't care and they just make it worse. I'm hearing 50 trillion, 100 trillion that they'll owe. Well, who's going to service the debt and who's buying the debt? Okay, and I'm going to show you that in a minute. As I said, if you got comments, questions, just let me know. I'm here to do this live. Right? So now you're starting to get into the really questionable countries, Cuba, Bahrain, right? So let me just close up some of these some of these windows here. So continuing along in my notes here. Uh, oh man, here we go. Okay, so this is very important because they'll say, "Oh, you can't compare the government to a business or a household and an income and spending. You can't do that." Well, that's all BS because it's the same deal. Okay, when you look at uh, which countries owns the most debt, this is now it will open your eyes. This is where we get kind of political. Okay, so when you start looking at this one chart right here, this is January 2003 in purple. Japan owned quite a bit of U.S. debt. When I'm talking about is when what services the debt is either countries buying the treasury issued debt from the government, and countries will buy that because they buy it because they think that the U.S. has a pristine and will always pay its bills and never default. Well, we came close a few weeks ago, didn't you? And it's going to get even harder next time around. And they even want to get rid of that negotiation process. They just throw it out of the window. But here's what's going on. You got Japan, 2003. They buy a lot in 2013, and they're starting to pare it back in 2023, right? So they're starting to get like we can't keep buying this stuff because they may go default, and we're going to get screwed. Here in China, these are the top two issuers in the past who bought U.S. Treasury, right? Now you got China, right? So now you go into 2003, right? They've radically reduced their issuance. Like they used to buy debt. This is what they've sold off a lot of their debt, but this is what they hung on to. Okay, but look what's happening with the UK. Because people are no longer selling off, these two countries are selling off U.S. debt, what they hold. Someone's got to step in to buy the new current debt. So it becomes these countries: Belgium, Luxembourg, and UK. But look at the pattern here of the UK. How much they bought this year? A lot, to try to supplement the losses of what Japan and China is not buying or selling off. So they're looking at other countries like the UK to buy up the current debt. And as I said in that article from CNN, the U.S. government's desperate for cash, right? That's CNN, okay? Then you got Belgium and Luxembourg, okay? So that's the current situation of the U.S. government. And tell me it will not have an impact on the U.S. dollar, because its credibility also for the U.S. dollar. And it also comes down to the debt has to be serviced interest-wise. And as that interest rise goes up each year and every 5 years, that eats into the capabilities of things like, oh, I don't know, the self-entitlement programs like, let's see, retirement for pensions, military, and whatever else the government's spending. They may be theoretically bankrupt by 2030. That was one of the recent reports that came out from one of the government departments. But of course, the mainstream never talk about that. So that's what's going on. And that's why you get countries like UK trying to step up to stem the losses, to buy up that debt that the government's trying to sell off to finance themselves. Because the only other source they have is tax. And you can only tax as much as you can. And remember what I showed you here, right? Only 1/3 of the population in the U.S. is paying tax. So you can imagine the lifestyle of the U.S. citizens is going to decline, right? You can't deny that. And as I said, I'm not here to bang up on the U.S. I'm just trying to enlighten you that the West is a declining set of economies. And I'm going to show you some other things that may shock you as we move into the BRICS. So we know about what's going on with BRICS: Brazil, Russia, India, China, and South Africa, right? So now they're the rising new powers, rising new economic powers coming to be. So here's some of the countries, and it's not about the countries I'm interested in. I'm more interested in showcasing the. Let's see. I hope this opens up. Uh, what's really important to highlight here is the countries that are part of this. Okay. So what we've got here are this is the impact now on the U.S. dollar. Okay, I'm just going to summarize it for you. So why do the BRIC nations want to create a new currency? Okay, and what are the advantages of the BRICS currency will be? Because they're still defining what the new BRICS currency will be. Most likely China won. Okay, I mean it's really China driving this. Strengthen economic integration within the BRIC countries, so they trade among themselves and not among the US or the West. This is the other big one. Reduce the influence on the global stage. Because in the last few years, the US has really taken upon themselves to weaponize countries that don't fall in line and don't play ball with what the US and what the West want them to do politically, military. So they punish them with the US dollar. They want to weaken the US dollar global reserve currency. So that is exactly what de-dollarization is. And they want to encourage other countries to form alliances to develop regional currencies. And they want to mitigate the global volatility due to unilateral measures and diminution of dollar dependence. So what's going on right now is if in a country, great example, Sri Lanka. I'm sure you heard about what's going on in Sri Lanka. They pretty well burned the capital down with any politician. They burned wherever they were, and they burnt down the part. The reason was because Sri Lanka was somewhat a corrupt country, but their debt, which got out of control, was denominated in, I believe, U.S. dollar, and then they got punitive sanctions against them, and then they got pretty scared of basically trying to finance their situation. So the IMF said you got to do this and this and this to get a bailout. So essentially, all that debt was issued in U.S. dollar, and then Sri Lanka saying, "Whoa, this what's coming out of the U.S. government in all these congressional hearings? They explicitly say that they will weaponize their U.S. dollar, and the IMF does the same thing for bailouts. So this is what's driving it is BRICS want off the U.S. dollar and the dependence of the U.S. dollar. But I'm going to show you. You may not think that these countries mean a lot. You will see what I mean when we move on into other charts and other articles. So the new BRICS currency, will it affect the U.S. dollar? Yeah, it will eventually lose its influence, loses its reserve status, and then as a result, the U.S. and its citizens get affected, as I said. So what they're focusing on: oil, gas, banking, finance, commodities, international trade, technology, tourism, travel, and the foreign exchange market. And da 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 da. Okay. So let me pull up the next article here. Any questions so far? Okay, so now this is the important one. Okay, we're going to look at GDP per capita. Okay, I want you to notice something here. Okay, Qatar, number one, Singapore, number four, Luxembourg, number three, Ireland, UAE, Kuwait, Switzerland, San Marino, da da da. You would think that the U.S., being as wealthy as they are, should be much, much higher. And this is falling, okay, because of basically politics. So it's dropping. Okay, Canada's dropping, UK is dropping, France is dropping. Like these countries should be the wealthiest countries. If you ask maybe 10, 20 years ago, they'd be right top of the list. But now there's new players coming into the foray that are much, much wealthier, much wealthier. And the ones to watch are the Qatars, the Mideast countries, the oil plays. the natural gas producers. That's who's going to make a difference. Okay, so knowing that, let me just pull up the next article here. So this is where it gets really interesting. Okay, first let me pull up this one right here. Okay, so this is on Reuters. This is not like some garage operation. Saudi Arabia seeks cooperation with China, ignores Western worries. So now you have another big Western, Mid-Eastern play stepping away from the U.S. So the Saudi Arabian nation, or I should say the Gulf region, are stepping away from being under the thumb of the U.S. That's why they sent Blinken over last week, because U.S. trying to control this situation. So now that Saudi Arabia has China to play off with the West for oil, they can do this and they can afford to do this. But it also impacts the U.S. and the West on oil. So people don't realize when you look at the global stage, the wealth easily is in the Mideast. Okay, that's where the top wealthiest countries are. They have virtually no debt, tax free. People are moving there, especially Dubai. And another great example, Switzerland used to be very influential. No more. It's now Dubai. And one prediction I've always said is that in the UAE, I personally think if it wasn't for the BRICS, it would be the UAE dinar that will be the new global reserve currency. And I'm going to show you why. So let me get to that article here. Now, this is where it kind of gets into the political. Okay. So I'm going to show you two maps here. And it's to do with the Russian invasion of Ukraine. So these are the list of countries that have imposed sanctions on Russia. They've talked about it, but the real countries that stepped up, that put sanctions on the US, Germany, Canada, UK, European Union, Japan, Australia. That's it. That's the only countries that have actually stepped up and put sanctions on Russia. So when you look at Russia, that you think that they should be weakened, like largely because of this invasion. No. Not only is India or China not supporting it, they're not putting any sanctions on them. And lookity, what's going on here. So I want you to know this correlation here. Actually, it's indirect. You have the West, Canada, US, all of Europe, majority, and Australia and Japan, putting sanctions, real sanctions on Russia, a political statement, right? So when you look at this, what I'm about to show you is a total opposite. Where's my 30 countries? So when you look at this map here, this is going to shock you. And I just discovered this in the last half hour, 45 minutes. So look at, these are the countries now that want to join BRICS. They ain't no US, no Canada, no countries in Europe, no countries like Australia and Japan. You see the difference here? So the countries that did not sanction Russia, all those countries that didn't sanction want to be part of the BRICS. So alone, when you look at this, you got Brazil, Argentina, Honduras, all these African countries. These two continents of South America and Africa, these are natural resource plays. These are countries that want to serve China natural resources. These are countries that want to be part of a new global power economy. And what blows my mind is that the Americans, especially the media, poo-poo this. You can poo-poo it maybe now, but in 10, 20 years, you cannot deny this. So when you have all these countries that have natural resources that are servicing now China, Russia, and the big power player is India. Okay, like they're the up and coming new global superpower. It might be China, but right now, all the manufacturers being shifted over to India. But you can see here we got Saudi Arabia that wants to be part of that, Iran, all that. These are all your oil plays. So what's happening is all the natural resource players are moving away from the West and moving to the East. Okay, that's really important to note because there's that the indirect correlation that these countries are ready and able to step away from the West, namely the US, to support, namely Russia, and they're indirectly saying, we don't care about the invasion on Ukraine. That's the political, all I'm going to say. If you got questions or comments on that, let me know. So that is going to drastically affect the U.S. dollar in X amount of years. I don't know. And why do I say that? Just alone on population, you got China and India, the two most populous countries in the world. Alone, if you factor in these Western countries like Canada, U.S., Europe, Australia, Japan, they probably don't even have enough of that population to have what India's got or what China's got. That's how just alone on the population, and these are countries going to get wealthier, especially India and all these other countries, as I said about the Mid East. So that's something to factor in. Okay, so let's move on to our next topic here. The other one that's taking note of this is this country right here, the old friend of the U.S. Here's the headline. Diplomat, is France backing China currency against the U.S. dollar? So can you imagine if you have a European country from the European Union that decides to no longer support the U.S. politically, militarily, and actually start buying product from China in the yuan? How can you tell me that that is not going to impact the U.S. dollar as a global reserve? Because once France does it, hey, Germany might do it. And Germany is a country that is the economic powerhouse of the EU. And then everything else will fall in line, probably including the UK. I wouldn't be surprised. So you're going to start seeing certain countries start to pivot towards the East. And I don't want to say China and Russia because they're not our friends. But economically, these countries like France may actually support, not directly, indirectly support this new global economy superpower called the BRICS. So will that happen on the US dollar? I can't say, but it's definitely not going to improve the situation for the US, namely, and its currency. So that's what I want to show. And it's kind of showing, as I said, in the market watch on the US dollar. So if I start to look at the report here on, let me see here if I can pull it up. So I'll pull over one of my charts here. So let's look at the DXY. So that's your currency player right here. And let's take a look at what's happened over the last 5 years, right? So it's been fairly stable, right? And all of a sudden, we have a problem last year. Dollar rises. Could have done a really good year last year if you just sat on the US dollar. And you can see what's happening now. It's been declining this year. So something impacted here. And is this a decline long term? I can't say. But it's just something to note. I mean, at the end of the day, I'm a kind of person that will follow what the data tells me because that's where the money follows. So I have nothing more to present, but I just want to show you what's going on with right now with all the headlines that I'm seeing. And it's for China and Russia, it's about natural resources. It's about countries, good or bad, those countries that want to be part of the Eastern Alliance, we'll call it. And that's wealth moving to that region. And the real big kicker difference will be the Mideast, especially the likes of UAE, Qatar, and Saudi Arabia, and Bahrain, and who else is in that region. That's the real money player. That's where the wealth is. And when they move over to the east, the U.S. becomes more and more isolated. And as I've shown you already, we know economically, by default in the debt, the U.S. and the Western nations are kind of like in decline. But if they bring out a new currency, which they're going to be doing come uh, August, well, there's a meeting somewhere somehow with these BRIC nations, and they're planning to put in the early stages of a new alternative currency from the BRIC nations. As I said, I think it's going to be something where it's going to be mostly China and the yuan, because China's trying to isolate as many countries, divide them as former allies of the West, namely the U.S., and bring them over under the influence of China. So that's really obviously what's driving that, but that will impact the U.S. dollar, and over time it will impact our lifestyle, because that interest to service the debt on top of the inflation that we're already going through, that will um, impact us over the next couple of years. Now, the next real big call on that will be in the next week, what the Federal Reserve does on its currency. And right now, with its currency, if they raise rates or lower rates, some are saying they could raise rates again because of the job numbers, and people don't quite understand why would the Fed want lower number of job creation and higher unemployment. Well, right now the mandate for the Federal Reserve is to fight inflation, but that the brainiacs that they are a few years ago saying, "Oh no, inflation's transitory," and they were like that for about a year, especially Janet Yellen. And oh no, that's transitory. That's going to disappear. And now they're fighting that same transitory inflation however they can when it went up to over 10%, and it's now down to about 6%. So they're now going after jobs to lower jobs, because job creation and jobs create inflation. More people working, the higher the inflation stays. The better word's elevated. So they're trying to raise unemployment to drop down inflation. That's their priority. And they can manipulate the US dollar so much, but if people aren't buying it, as I showed, like only really Britain is buying it, then that it's very hard to influence that. They may come up with something creative. They may repackage the debt situation. They may repackage what a recession is, even. I'm sure you heard that. So I can't say, all I can tell you is you cannot rely on major media anymore, especially like the Bloombergs now. It's gotten so political, and so on. You have to do your own research. And that's why I think TradingView is a great resource for that, because you can see all the different types of treasury data for free. No, you don't have to pay for the data. And the thing is, if you know what to look for, that's what you rely on within TradingView. So, is there trading opportunity in trading treasury? I'd like to say so, but this is the other question I have. If you're kind of like me, moving towards all and only ETF, if I was to show you some ETFs here, like this one for treasury, there's one called T-Flow as an example. T-Flow, treasury floating rate bond. You can see how volatile it is. How do you trade that? And this is what I'm seeing. And with anything with treasury ETF, it's super volatile, or there's like major gaps in it. So you can't trade this stuff. And I don't know if that's normal. I can't say, I'm not an expert in it, but I'm just trying to help you identify that this is so distorted. And like Look what's happening here. You got a normal price line all the way up to here in 2022, and things started to go wonky for whatever reason. It's trending up, but it's so volatile. So everything's all fine here, and then everything just started last year and still continues. And that volatility, I can show you. There's some normal looking, like TLT is another big one that most people know. That's a 20 year, and you can see it's very normal looking. There's just so you know, there's people put money into short term. So here we have 1 to 3 month T bills, and look what happens. So starting May of last year, everything's kind of looked normal. And look, it's just that's how much people are putting money into these T bills of 1 to 3 month, right? And you can see if you looked at these the crazy gapping, it just doesn't look normal, right? Here it looks normal, but starting last year, things are breaking, but I don't know why. And will that impact the U.S. dollar? Yeah, it will. The other thing I forgot to mention is the credit rating of the U.S. So if you have countries like, let me pull one up as an example here. So let's say if I do a duck search, because I don't trust Google anymore, as most people probably will say the same thing. But if I looked at Moody's USA credit rating, right, you'll see here in the latest news when those negotiations were happening. Um, when those negotiations were happening, look at this. 4 days ago, credit rating agency Moody's downgrades. Sorry, they should find the U.S. here. Basically, in the last week, the credit rating for the U.S. was put into negative watch, right? And that was all due to all the So credit rating agencies like Moody's decide credit rating, and they were all put on credit watch. So that's the credibility of the U.S. government declines as well, and that also has a huge effect on U.S. dollar and the interest it takes to service the debt. It's like anything. If you have somebody who has bad credit and they want a loan, they have to pay a higher interest rate to get the loan, because whoever's issuing the bank, let's say, issues the loan. A country or a person with a lower credit rating is riskier to take the loan, so they have to pay a higher interest rate to take the loan because they're a high risk because they may not pay. And that's same thing with the U.S. government. If they're going to go and bicker about these debt deals or deficit debt deals, and they bicker about it, it hurts their credit rating and their ability to service the debt. So that's another important factor I forgot to mention that you probably never hear about through the mainstream media. So again, if you're really serious about this, don't rely on any of the financial, the CNBC, Bloomberg, any of the mainstream media. You got to use and know where to go to get your own resources. And the best place I can tell you is probably right here on TradingView. Just got to know what to look for. So as I said, there's not much more I can talk about, but just things don't look normal in the space. So any questions or comments? So anything at all? I'd like to talk about what I do, but hey, I'm restricted on what I can put on a stream with TradingView. But this was all purely educational. And will there be a replacement for if things go bad for the U.S. dollar? I mean, we're talking years away. Possibly, I always thought the dinar, or sorry, the British pound would be one, but I truly believe the best one that looked best. Let me just see if I can find it. Is right in here is UAE. Okay, Turkey, I would have thought, but Turkey's like in real hot water on their currency, their lira. But Dubai is an interesting country because they purposely stayed out of the politics of what Russia was doing with Ukraine. So I know myself in the early stages of the Russian invasion. I'm sure a lot of the oligarchs in Russia knew what was going to happen weeks before the actual invasion. I've talked about the Binance thing where they put money into Binance. It's got a license in Russia just a few weeks before the invasion. And then, the BTC ruble trade suddenly spiked, or the waves in ruble spiked. Waves is a Russian crypto coin, and that lasted for about a month. And then all of a sudden, you start hearing about, oh, Dubai property market's going up. Why? Because the Russian oligarchs are buying up property. So they transfer all the money out of Binance and buy up Dubai property. So that's one of the reasons why I bring up Dubai, is because Dubai is neutral here, like Switzerland. Dubai, their currency, the dinar, is so intermingled internationally, including with Western countries like the U.S. And I'm starting to think maybe just maybe the dinar may go up, or the Qatar currency as well. And that, to me, would make more sense that those currencies could be um, actual reserve currencies, because they're I'm not saying supporting, but they're allowing Russians to go there, travel. And China's the same, and Dubai don't really care who you are, as long as you're willing to invest. Up goes their currency, as well as the economy. It's booming in Dubai. It's very expensive now. No tax, no property tax. That's why people move there. Businesses are moving there, and that's where the wealth is going. So I'm thinking maybe, just maybe, that could be the next global region to watch for global reserve currency, because, as I said, it's one of the rare regions in the world that's booming economically. I've shown you all the other countries that have debt, but not Dubai. They're booming, and that's under UAE. Dubai's the Hollywood kind of Walt Disney of Dubai, of the UAE, but the real financial powerhouse is Abu Dhabi. When Dubai in the last recession needed a bailout, they just went to Abu Dhabi and got it. They didn't have to go anywhere else because Abu Dhabi is so wealthy. Same with Qatar now as well. So when you start to see these countries, including Saudi Arabia, with oil move to the east, that's something to pay attention to, because that's the wealth, the real wealth and growing wealth and influence in the world is moving under the, I guess, the umbrella of what China and Russia are saying. And as I shown you an article, Saudi Arabia don't care about the oil. If China wants it, they get it. And that, again, impacts the US dollar because it's not being transacted in the US dollar, known as the petrodollar, becomes a petro-yuan. And that's a huge driver of what made the US dollar back from the 70s was the petrodollar, because when US needed oil, they promised, well, we'll protect you. We'll protect you, therefore just buy in US dollar. And that right there is how Saudi became one of the largest military customers for the US. But now, lately, they don't care. They move it all off to the to China and Russia. So US is losing its influence. And that has a huge impact on the US dollar. So these are sort of things that people need to know about. And as I said, when you get countries like the UAE, especially Dubai and Abu Dhabi, their economies are blowing up and wealth is going there. That's a big thing. That we're talking hot capital is moving there, and that's, once you start to lose that influence from the West going to the East, that's a big deal. But nobody talks about that at all. But it's just right in here. That's the money. That's the new money center globally, without a doubt. It's not oil anymore. It's about what Dubai has become, and being tax free as well. And then that gets now part of this. So as I said, when I showed you the other map here, these are your or sanction countries sanctioning Russia. And then when you look at the opposite, okay, that's great. Who cares? But now they're developing their own region, and that's a reality you cannot deny. And then a lot of the media in the U.S. say, it won't add up to much. Really? Have you heard about what's going on in Dubai? Have you heard about what's going on in Qatar? I mean, I just showed you a chart that just said that right now Qatar, and it's been for quite a few years now, that Qatar has the highest wealth per capita in the world, along with Bahrain and Kuwait, and these other countries that used to be in their legacy Western countries are tick 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 falling away because of their debt situation. So it's not that, it's not just the U.S., it's other countries. So anyways, I'm going to get off that, but that will have a huge impact on the U.S. dollar. But I'm just trying to say it real here on TradingView. Anyone else got questions or comments? So I'm going to shut up. I'm almost at 1 hour. Any questions, comments at all? If not, hey, thanks for watching and all that fun stuff. And we shall. I'll do it going once, twice. If you got a question, type away. Going once, going twice, going 3 times. So I guess we're done for tonight. Thanks for watching. If you're about to watch it, hopefully you get something out of it. And we shall talk to you later. So this is just purely educational. But yeah, this stuff will impact the de-dollarization and again impact dollar and then impact those like us living in the West. Thanks for watching. Have yourselves a good night, good day, wherever you are. Over and out.